Hi friends, US Fed Chairperson Mr. Jerome Powell's term is coming to an end next month and President Trump has nominated someone new. Let us understand if he will reduce the interest rate, what are his views on the economy, and so on and so forth. President Trump is not a big fan of the Fed chairpersons unless they reduce the interest rates. This would help his government borrow at a lower cost. The current chair, Mr. Jerome Powell, has resisted the demands of the president to reduce the interest rates. Because of their disagreement, President Trump attempted to remove a Fed governor, and the US Department of Justice under his administration launched an investigation also into Mr. Powell. This was seen as an attack on the Fed's independence. In any case, Mr. Powell's current term expires in May 2026. Kevin Warsh has been nominated by President Trump to be the new Fed chairperson. What are his views? He was a member of the Board of Governors of the Federal Reserve between 2006 and 2011. He lost out the Fed chairmanship to Mr. Powell 8 years ago. He is also in favor of lower interest rate, but the reason is different from that of President Trump. He believes that AI will increase productivity, so the firms will be able to produce more goods, services at lower cost. This low cost will be passed on to the customers, which creates deflationary environment. He criticizes Fed's increasing balance sheet and advocates for its reduction. Additionally, he wants to reduce the level of communication by Fed officials to curb over-reliance on forward guidance that locks markets into expected paths, leading to volatility when reality diverges. What are the other sides of his views? If other members of the Federal Reserve do not agree with his AI view on inflation, it could cause friction within the committee. Additionally, the current situation is not at all suited for low interest rate because for the past 5 years at least, the US inflation rate has been above the target of 2% and the Iran war has complicated things further. Regarding the reduction of Fed balance sheet, the Fed has already been implementing this gradually. A more rapid reduction of the balance sheet could end up increasing the market interest rate, causing the opposite effect. Regarding the reduction in the central bank, such communications are important in shaping the market expectations. A gap in this communication could increase the volatility in the financial markets. In summary, the policy decisions taken by Federal Reserve in the US reverberate across the global economy. Therefore, the person leading such an institution must have a strong grasp of macroeconomic dynamics. Thank you.